Hello, welcome to FX Training Zone. My name's James Clayton and this is your daily trade review for the 30th of June 2010. Okay, I'm going to go through something quickly just to give you a few ideas of what's going on in the market. This is the daily chart, and as you can see it's been downtrending for quite some time. I'm just going to show you some key fib levels, so for us to get an idea of where the market could come back to. So that's our first wave. Now I'm going to position this to more current trading times. So on this final wave down here, it's going to be in position. As you can see, it hit it nicely at the 123.6% and bounced off. But as you can see, we've got our Fibonacci retracement points all up here, so these are all places that the market could stop and turn back around. So looking into the 4 hour now, I'm going to show you a trade that we took on at FX Training Zone that we did yesterday, which was the 29th of June 2010. And I'm going to show you how we came to the conclusion of entering this trade, the risk that was involved, and how we figured out our target and where the market was going to go. So first of all, the first thing we've noticed here is obviously this is trending up gradually on this retracement back up. You can see we've got this trend line that's going up here, and there's also a trend line along here, and as you can see immediately we've got a higher high here and a lower high here on the MACD, which tells us that there's divergence in the market. So immediately we're thinking that this is a possible turnaround. As you can see also, it's hitting a pullback area of the 38.2% retracement of the daily fibs. So this is the area we're looking at. So we're thinking about possibly entering the trade here. So as you can see now, we've got a bit of consolidation here, and it's making new highs and not really trading up very much. And then we've got the most important candle, which was this one, which broke out of this box range. So as FX Trading Zone promotes, we look for a pullback back into the box range, and to try and figure out the best entry point, we're going to use the shorter time frames to figure things out. So zooming into the 15-minute, excuse me, we are looking at this area here. So it's come down, it's broken out of the box range of this with the 4 hours. This is the 15-minute. So now we're looking for the pullback back into this candle here. So on the 15-minute, the pullback is here. So our actual entry was at 1.5103, which is 103, which was here, which is where we sold it. How we got this point, I'm going to draw the fib first wave here, which we are counting as the first wave down. So we were looking for the pullback into the first wave with an ABC retracement, this being our A wave, and the A wave usually equals the same size as the C wave. So I'll change the color of that, and we will see that it is the 100% is at 107. We have our 23.6% pullback of the retracement, Fibonacci retracement of the first wave at 1.5100. So we're looking for, this is our resistance area, so we're looking for a sale in between here somewhere, which is why we came to the conclusion of halfway of 103, with the high of 104, so it's a brilliant sale. So let's get rid of that fib, and before I go on, I'd like to say our risk level was the high here. So the high was at 118, so we stuck our stop in at approximately 123, so we're looking at 20 tick risk here. So we're gonna try and work out now how far this market's gonna go and stick our target in. As you can see now, the usual first extension point would be 100% of the first wave. That would be our first target. So looking here now, that's at 1.4989. So we're a little bit more cautious, so we put it before the level just in case it doesn't quite reach it. So we had ours at 1.4993, which is just four ticks above it, but it just gives it that bit of flexibility. So as you can see, it came down, pulled back, didn't break above where we'd entered, and the rest was pretty gradual trading down through the night and the next morning. And as you can see, it hit our target here. That netted us 110 ticks profit, with a risk of 20 ticks, which is just over 5-to-1 ratio, which is a brilliant risk reward for the trade. It's not the only trade that was available though. We were then looking for the next possible trade, because usually third waves are a little bigger than 100% of the first wave. So we here at fxtrainingzone we took on the second chance trade from an aggressive pullback. Our risk level was up here, and actually tried to sell 60s but didn't quite catch them, and managed to sell 58s. We saw this big, strong, powerful candle here. We had the 55 EMA moving average moving down here with the 200. We had this support, the resistance here. So we sold it here, and we were looking for this 15-minute candle not to close above this large candle to show a negative candle, and we were looking for it to head down south to the 123.6. In fact, it went further to the 150%, but 123.6 was our next level target. So from the 1.5058 where we sold it, we had our target then at 1.4964, again just above the 123.6% extension, and that netted us 94 ticks. And again, our risk on this occasion was above this high of 68, so again 72, so we're looking at 14 ticks risk there, and again adding the 5 ticks on, we're looking at 20 ticks at the most. So 20 ticks to again to make 94 ticks. Brilliant trade, nearly 5 times risk reward ratio. I hope you've enjoyed today's video. If you have any questions or would like to post any comments, please feel free, and I'll try and get back to you as soon as possible.